My name is AKIFF bin Abdul GHAFAR. I will introduce about country of India. India is officially the Republic of India is a country in South Asia. It is the seventh largest country by area and the second most populous country. Besides, India is the most populous democracy in the world. Last but not least, the latest growing major economy in the world and is expected to be one of the top 3 economic power in the world over the next 15 years. The Indian rupee is the official currency of India. The issuance of the currency is controlled by the Reserve Bank of India. The Reserve Bank manages currency in India and derives its role in currency management on the basis of the Reserve Bank of India Act 1934. The Indian rupee, which was on a par to be to the US dollar at the time of independence in 1947, has depreciated a little more than 68 times versus the greenback during the last 67 years. The Indian rupee hit an all-time low of 68.824 versus the US dollar on August 28, 2013.
Hi, Assalamualaikum. So today I will explain the GDP growth for India. Before that, I'm going to introduce myself. My name is SITI LAILA AZWA, AZMAN. My metric number 2020147776. Okay, in economic, GDP is defined as total market rate of all finished products and services created in countryside in a given year. Gross domestic product is calculated with this method. The GDP in India has increased by 8.4% in last quarter of 2020 over the previous quarter. For a period of 1981 until 2020, average quarterly GDP growth in India was 7.3%, reaching to its peak at 13.3% in March 2010 and a record low of negative 24.4% in June 2020. Okay, in this slide for interest rate, over the years, another important factor for movement in exchange rate has been interest differential, such as difference in interest rate between major countries. Currency with higher interest rate attract large number of investors seeking a better opportunity for their investment. This makes the currency more attractive as a form of investment and increases the demand of the currency. The interest rate decisions are taken in India by the Reserve Bank of India Central Board of Directors. This rate was last reported at 4%. From 1981 until 2020, India's average interest rate was 6.41%, reaching to highest at 14.5% in August of 2000 and a record low of 4% in May of 2020. Okay, for this slide, inflation is one of our independent variable. It refers to continual rise in general price level or the rate at which regularly prices of goods and services increase and purchasing power of people is low. Inflation affects the distribution of income. The increase in price variability causes high inflation. For a period of 1981 until 2020, average quarterly inflation rate in India was 6.62%, reaching to its peak at 12.7% in November 2013 and a record low of 1.54% in June 2017.
Exports are goods and services are produced in one country and sold to buyers in another. Export along with import make international trade. Exports are incredibly important to modern economies because they offer people and firms many more markets for their goods. One of the core functions of diplomacy and foreign policy between government is to foster economic trade, encouraging export and import for the benefit of all trading parties. From 1981 until 2019, the average of export of goods and services for India is US dollar 167 billion and reaching the peak in 2019 about US dollar 538 billion. The lowest of export of goods and services for India is in 1981, which is US dollar 11 billion.
Now we proceed to the import of goods and services in India. Import of goods and services are important for the economy because they allow a country to supply non-existent, scarce, high cost or low quality certain products or services to its market with products from other countries. Based on the graph, the import of goods and services in India has increased by US dollar in the quarter of 2013 over the previous quarter, then decreased by US dollar in 2015 until 2017. Lastly, the import of goods and services increased by US dollar in the last quarter of 2019. Now, we proceed to the descriptive analysis of India for 40 years, starting from 1981 until 2020. Based on the descriptive statistic of determinant of the exchange rate, the table shows the highest mean is gross domestic product 764.9082177 and the lowest mean is export of goods and services 1.67950. Furthermore, the table shows the highest standard deviation is gross domestic product 581.3549321, while the lowest is export 1.88273.
Hi, my name is Nur Eva SHAFIQAR binti Muhammad HANIPAH. My matric number is 2020-844-828. Okay, for this slide, I want to present about correlation. The value of the correlation of the gross domestic product, export and import related to exchange rate is 0.851, 0.846 and 0.831 respectively. It is considered as positive correlation. We can explain that if the gross domestic product, export and import increase, the exchange rate of Indian rupee is also increasing. The value for interest rate is negative 0.309, while for the inflation is negative 0.480. Thus, both of the factors shows the negative correlation with the exchange rate. So, we conclude that if the interest rate and inflation increase, the exchange rate of Indian rupee will be decreased. For model summary, the value for R square is 0.801. It means that approximately 80.1% of the exchange rate of Indian rupee is explained by gross domestic product, interest rate, inflation, export and import. The value for adjusted R square is equal to 0.771. It shows that 77.1% of the variation exchange rate variability. The dependent variable is explained by the independent variable.
Next, we proceed to the coefficient. The value of this statistic is suggesting that the export of goods and services has a positive significant impact on the exchange rate, thus rejecting the null hypothesis and accepting the alternate hypothesis. While the gross domestic product, GDP, interest rate, inflation and import of goods and services have insignificant effect on the exchange rate and the null hypothesis is accepted.
The last one is ANOVA. The p-value for the f-test is equal to 0.000, which is less than the level of significance 0.05. Therefore, the null hypothesis is rejected. This means that the gross domestic product, interest rate, inflation, export and import is statistically significant variables is explaining the variation is the exchange rate of Indian rupee.
As a conclusion, Indian rupee is a quite stable currency from years to years. This is because we can see from the factors that determine its exchange rate, which mostly better every year. First, India's GDP is increasing slowly from 1981 to 2001, but from 2003 to 2019, the GDP is increased drastically. For interest rate and inflation, India faces an up and down graph movement. For the import and export of India, the graph movement are approximately with GDP. So, we can conclude that the economy of India is improving starting in 2003.